Get ready for a pivotal week in the markets. What investors need to know. Buckle up, investors. This week could set the tone for the markets for the rest of the summer. From major economic reports to corporate earnings announcements, the next few days are packed with events that could influence everything from stock prices to interest rates. Whether you're a seasoned trader or just getting your feet wet, understanding what's coming will be key to navigating the volatility ahead. The big economic indicators to watch: the week kicks off with a series of high-impact economic data releases that could give clues about the health of the U.S. economy and how the Federal Reserve might respond in its upcoming meetings. Consumer confidence report, Tuesday. With inflation still a major concern for households, investors will be watching to see if consumer sentiment is strengthening or slipping. A strong number could signal resilient spending, while a drop might reignite recession fears. GDP growth estimate, Thursday. This early read on economic growth will be closely monitored for signs of slowdown or acceleration. Any surprises could move markets quickly, especially in interest rate-sensitive sectors like housing and tech. Core PCE inflation data on Friday. Often dubbed the Fed its preferred inflation gauge, this report could influence whether policymakers lean toward rate hikes, cuts, or simply holding steady at their next meeting. Earnings season heats. Upon the corporate front, earnings season is hitting its stride. Several heavyweights across tech, retail, and finance will report results this week, and their numbers could set the tone for entire sectors. Big tech giants, Apple, Alphabet, and Microsoft are all on deck, and their performance will give insight into the strength of the tech sector amid rising interest rates and slowing global growth. Retail leaders, Walmart and Target, will reveal how the American consumer is coping with inflation and shifting spending habits. Financial sector players. Major banks like JP Morgan and Goldman Sachs will update investors on lending activity, credit health, and the state of capital markets. These earnings will not only affect individual stock prices, but could also serve as a broader barometer for corporate health. The Fed factor in market sentiment. Even with no official meeting this week, Federal Reserve officials are scheduled to give speeches that could hint at the central bank's thinking on interest rates. If their tone suggests the Fed may pivot toward easing or tightening sooner than expected, it could send shockwaves through bonds, stocks, and currencies. Meanwhile, global markets will also keep a close eye on geopolitical developments, from trade talks to energy supply issues, that could add another layer of volatility. How can you position yourself? For investors, this week is all about staying informed and nimble. Market swings are likely, especially as traders react to earnings surprises and economic data. Diversification and discipline will be key for those looking to protect gains or find opportunities amid the movement. What do you think? Do you believe this week's data will push the Fed closer to cutting rates, or are higher rates here to stay? Which company's earnings will have the biggest impact on the market? And most importantly, are you prepared to adjust your strategy if the headlines turn the markets upside down?